So welcome everybody. I'm so glad that you are here on for this session. If you have missed out the first part one on introduction to futures and options, please go to the Kingdom Bell Creators YouTube channel and watch that video. It will be really helpful and you will get a good understanding. And after that, please do come back and watch this video because I'm going to talk about option strategies and the power of hedging. And make sure you watch the entire video and don't miss out. See it a few times if you have to, if you understand, so you can understand it really well. And then I'm pretty sure that you're going to do well. Trading is always made easy if you know what. All right, so let's get into this. Welcome to KWC. This is learning session 15, July 5th, and today we're going to talk about option strategies. Okay, so I have two things that I want to tell you when it comes to options, and that is first, we have to have an edge. Now, edge basically means the strategy that we use to decide whether which trade to enter or whether or not to enter a trade. Okay? And so there are three legs to my edge that I always use. One is technical analysis, second is risk management, and third is my entry and exit strategy. Now, when it comes to technical analysis, I want you to know technical analysis is very important for me. I always decide my trading based on technical analysis. It's not based on news or Glenmark discovered a drug or idea got funding from there and it's going to go up. None of that really matters to me. Technical analysis, the charts, I respect them, and that's how I decide. And so when it comes to technical analysis, the first part is that I always am careful about the chart time frame I use. If it's intraday, I make sure I use the 15-minute chart time frame. If it is option trading, if it is short-term trading, if it is long-term trading, normally it's the 4-hour, the 1 day, and even the 1 week charts that I use. Okay. Second, indicators. I don't use a lot of indicators, but there are a few indicators that I use, and those are very important to me. Those are the moving average, the MACD, and now I also use the stochastic a bit. And these are the three key indicators that I use. I don't use anything else. But again, I base my moves based on indicators and watching the technical charts. Trend lines, breakouts, all of that by drawing lines, and of course these indicators. Without these, it doesn't make any sense for me to enter into any trades. And of course, volume and momentum also plays its role. But technical analysis is very important to me, and that's one of the key factors in making my decision when it comes to what my edge is. Now, if you've known and if you've seen how I trade, you will know that normally I get somewhere between 66, 65 to almost 90, 95% of my trades right every week. And that's huge because most traders would get somewhere between 60 to 70. And the reason for my success rate is basically my edge. But I want you to know, I don't have a 100% edge, which is why when it comes to options, there are two things that we're talking about today. Key one is edge. We talked about technical analysis. Let's look at what's the second thing, risk management. Now, it's very important that we know what our portfolio size is when it comes for trading, for holding, all of that, and we manage it well. I have a thumb rule. I don't and I wouldn't put more than 8% of my total portfolio into any trade. Also, my total portfolio size, my trading portfolio is only about 30-40% of my total portfolio size. And out of that, again, I make sure that I follow that overall rule. Okay, I don't put more than 8 to 10% of my total portfolio into any trade, which is very important to me. Okay, and the same time, risk percentage. I make sure that I don't risk more than maybe 1 to 2% of my trading portfolio in any trade. So if I have a trading portfolio of about 4 lakhs, my risk is somewhere between 4,000 to 8,000 rupees on any single trade. In options, I've sometimes seen losses of 10,000 rupees even if I decide to exit. But usually that is the risk percentage that I carry, not more than that. Whatever is your portfolio size and whatever is your trading portfolio size, you have to manage your trade and your risk percentage accordingly. And also, I always respect stop losses. If I have set my stop loss, I will respect it. If it hits, that means basically my edge has gone wrong and the decision I made was wrong, and I'm going to respect the stop loss no matter what. Right? So that's risk management. If I don't abide by these rules, I shouldn't be trading. Right? The third part is my entry and exit strategy. I always know when to enter, when to exit, and where to place a stop loss. If you don't know what these rules are for me, please go back to the YouTube channel, Kingdom Bell Creators. Look up those videos when we talked about the technical charts and the strategies that I use, and you will know that what are those rules or the the requirements that I need when to enter, when to exit, and where to place the stop loss when it comes to any trade. Okay, so these are the three legs of my edge. Okay, now if I had a 100% edge, trust me, I wouldn't need to do anything. I would just blindly do anything. But my edge is not 100%. Now let's look at an example of. Okay, I want to talk about how we do trade with a naked option, and also how we hedge and why we hedge. And so for that, let's look at Berger pains. Okay, now this is the technical chart for Berger pains. I feel that Berger pains is going to go for a technical breakout at this point. Just so you know, this is not a call to you to trade Berger pains on Monday because of this. This is just for learning and information purpose. It is not a call to anyone to do any trade on Berger pains. Okay, this is for us all to learn, basically. Okay, but my analysis, my technical charts analysis tells me that Berger pains is probably going to go from 500 to 550 ish on a breakup. Now, based on that, I'm looking at getting into the an option on Berger pains. And so I look at the option charts. I can see that the call options, the largest open interest is at 550. So that tells me that most people think Berger pains might not go beyond 550. That's probably a lot of people selling 550 call options. Okay, but that's a good understanding that I can get. And I can also see that the 500 and the 520 and the 510 are kind of call options are places where there is enough volume to enter also. If I look at the options chain. Now, the problem is why we have key 2 as hedging is because our edge is not 100% right. Okay, if your hedge was 100% for sure, if my edge is always right, I don't have any need to hedge. I can just go with a naked option. In fact, the last week when I did my trading, if you've seen it, you will understand that I made almost 10% last week. But all of that was naked options or naked futures. I never hedged any of these positions, which is stupid to tell you the truth, to be honest. But again, I was very sure that my edge would be good. And in fact, out of the 9 trades I did, 3 were wrong so far. Okay, they haven't improved yet, but 3 were wrong. One of them even I exited. So the edge is never 100% for anyone. So it is always important that we hedge as well. So unfortunately, because there is no 100% edge, it's best to use hedging. Okay, so now when it comes to options, there are 2 simple, I would say, there are a lot of strategies that people use, but hey, simple things. Let's keep it simple. If I feel that a share or the market is bullish, I can always use a call spread strategy to hedge my position. If I feel the market or a particular share is bearish, I can always use a bearish put strategy or spread strategy to hedge my position. What does this mean? In the bear call spread option strategy, basically I will buy so if for example, Berger pains 503, what I would do is probably buy the 510 call and sell maybe a 550 or 540 call option, okay, for the call spread. For the bear put, suppose Berger pains again 503 and I believe it's bearish, is going to go down, I can buy the 500 put option and I can probably sell a 480 or a 460 or a 450 put option. Okay, so that is a bearish put spread, and if it's bullish, if I feel it's bullish, it's a bullish call spread. Very simple. You don't have to use a lot of strategies when it comes. Of course, there is the straddle and all of that we can use, but I think the simplest hedge is the spread option. So let's look at what we can do with Berger pains when we hedge it. So again, the technical chart is there, the option chain is there. So I went to Sensei Bull and I asked them, hey, I feel that Berger pains is bullish. It's going to go to 550. What do you think? What's the best option that you give me? And they gave me a 510 call option buy and a 540 call option sell. But then I also realized this is just on the free version. They said there are other strategies that you could probably do which could earn you a better profit. So I've subscribed to 1 month of Sensei Bull Pro version. Because this, I couldn't do anything. I couldn't change the numbers on this and test it and analyze it. So I subscribed. Okay. So once I subscribed, I realized that, hey, I looked up their strategies and I looked at a call and call spread, again, a bullish call spread option, but with the buying a 510 call and selling a 550 call. And I looked at it and they said could have a potential profit of 31,000. And I just checked the numbers. So normally I don't hold it for the entire month. So if I were to hold this, say I was targeting 550 by the end of this week. And so I tweaked those numbers to test it. And so if I were to use this hedge option, you can see that I would probably get somewhere around 15,000 rupees. Now, if I were to just do the naked call option of 510, I could probably get around 30,000 rupees. Now you will say, oh wow, 30,000 rupees versus 14,000 rupees. Hey, doesn't it make more sense to just do the naked? But the problem is with it, what if instead of going to 550, Berger Paints goes to 480? If it goes to 480, the hedge position will only lose around 6,000, 7,000 rupees, but the naked option would lose 15,000 rupees. Okay, so you can see why when you hedge, your profit might be a little lower, but your loss will also be lower, okay, because you're hedging. Now here's the key difference. I put this in a chart, in a spreadsheet for you to see. If I go with the naked 510 call, the capital that I had to pay is about 21,000 based on Friday's numbers, but my break even is 529. So I really have to cross 529 for me to see an actual profit. Okay, the maximum loss is I could lose the entire 21,000. The profit that I worked out at 550 at the end of the week is 30,000 rupees. Very good. Okay, I put pay 21, get 30 back. Great. And the profit, maximum profit is unlimited. What if it goes to 600 or 700 or 800? Right? But if I hedge it, look at this. I would actually have to pay. I had to actually pay 21,000 in the beginning. Because I sell the 550 call, I will get back about 8,000, 9,000 rupees. So my actual amount that I pay is 12,700-ish based on Friday's prices. But I would also have to keep a margin of 20,000 rupees. So an effective amount of 32,000 rupees, say, okay, versus 21,000. But look at the break even. It's at 522. Once it crosses 522, I'm in the profit. I don't have to wait for 529. The maximum loss I can have is only 12,705, not 21,000. But the based on my calculation, if I reach 550 on Friday, I would probably gain 15,000 rupees. The maximum profit I can get is only 31,000. And you say, wow, only that much? Well, that is quite good. You know, if I put 12,000 rupees and I get 31,000 rupees, that's good enough. But there is protection also. If it goes wrong, I'm hedged. Okay, that's the difference. When I go naked and hedged, here's the difference. Maybe my edge is really good. Most of the time, my edge is really good, but it's safer to hedge. Now, just for you guys to understand, there are people who often option sell, and this is only for people who have a lot of capital. But if for me, based on the analysis, and especially because the market is slowing down a bit, I'm believing that the market won't go below 10,000, 10,200 in these coming weeks. And it won't go above 11,000, 11,200 in the coming weeks either. So if that was the case, I probably could sell 11,000 call, and I could sell a 10,200 put, and I could gain 17,000 rupees as a premium, as an option seller, on a margin of 1.28 lakhs. If it works out, I will, in 12 days, I'll make 13%. So people do this a lot, by the way. I'm just putting it out there so that you can understand option selling too. I basically prefer option buying more than option selling, simply because not a lot of people have a lot of capital, and it's dangerous. The option selling also has a lot more risk than option buying. So basically, I believe in hedging. It's important, even though I didn't hedge at all last week. I think hedging is very important. It's good if you can hedge. I prefer to be an option buyer than an option seller. And so those are my thoughts when it comes to options. Hedging is really good. Hedge as much as possible. If you're not part of KWC yet, I would encourage you to come and register with us. Join us at bit.ly/KWC Plan 1. I would love to teach you how to trade, how to invest well. And so that's it. You know, have a great time. If you have any further queries, please do message me, WhatsApp me at 9495974264. Please remember to go to our YouTube channel, Kingdom Wealth Creators, and subscribe, click the bell notification so that every time I put up a video, you will immediately be able to see it and learn well. Also, if you can follow our Facebook. Thank you so much. If you haven't watched options, the first part 1 video, please watch that first before you watch this. Watch both these videos a few times and understand how to do options. I'm telling you, options is the way to go when it comes to trading.